Hey everyone, welcome back. Today we're going to take a deep dive into how the conflict in Ukraine is sending shockwaves through the global economy and what it all means for you, especially if you're a U.S. investor trying to make sense of it all.
Yeah, it's definitely a lot to unpack.
There's a lot going on. I mean, we've got this proposed ceasefire on the table, but the reactions are, well, they're all over the place. Some European countries seem to be cautiously optimistic,
Wow.
but Ukraine, well, they're saying no way, and Russia, well, let's just say they might see this division as an opportunity.
Absolutely. And you can bet the markets are already reflecting that uncertainty.
Oh, yeah. What are we seeing out there?
We're seeing European stocks on the rise, defense stocks are climbing,
Makes sense.
and even the euro and the pound are gaining some traction.
So is this a sign of things to come or just a knee-jerk reaction to the headlines? How much stock should we actually put into these early market movements?
That's the million-dollar question, isn't it? See, markets, they tend to be a bit dramatic,
Hmm.
reacting quickly to any news that drops.
Oh, yeah, they're very reactive.
But to really understand where things are headed long term, we need to look beyond those initial reactions and consider the underlying factors at play.
Okay, so let's unpack that. What are some of those key factors we should be paying attention to? What's going to give us a clearer picture of the long-term economic outlook?
All right, well, one major indicator to watch is natural gas prices.
Okay.
Europe relies heavily on Russia for its gas supply, so those prices are a pretty good barometer of investor confidence.
Right.
If prices stabilize or even start to drop, it could mean that investors are betting on a lasting peace. And that has ripple effects,
Hmm.
potentially leading to lower energy costs, not just in Europe, but globally, including in the U.S.
That makes sense. Lower energy costs would definitely be welcome news for everyone, especially with inflation still being a major concern.
Exactly. Now, on the U.S. side of things, we're seeing some interesting strategic moves.
Yeah, like what?
Well, there's talk of a potential minerals deal with Ukraine,
Hmm?
which could be a game changer in terms of resource independence. And then there are the new tariffs being slapped on Canada and Mexico.
Huh. So it almost feels like the U.S. is trying to shore up its own position on the global chessboard, wouldn't you say?
It definitely gives that impression. Securing those Ukrainian resources could be a huge win for the U.S.
For sure, especially as competition for critical minerals heats up.
Yeah, but those tariffs, that's a bold move. Could they backfire and hurt U.S. businesses in the long run?
That's a good question. Trade relationships are so complex, any move like this is going to have a ripple effect.
Definitely. It's a delicate balancing act, trying to boost domestic production without damaging key partnerships.
Absolutely. And speaking of bold moves, Europe is considering seizing over 200 billion euros of frozen Russian assets.
Wow,
That's a pretty strong message.
it is.
But could it escalate things even further? What kind of consequences might that have?
It's a high-stakes gamble, for sure. On one hand, it could put significant pressure on Russia,
Right.
but on the other hand, it could trigger retaliation with Russia seizing Western assets within its borders.
Yikes. Almost like a global game of economic chicken with everyone waiting to see who blinks first.
Kind of, yeah.
And in the midst of all of this, you've got China playing it pretty close to the chest, despite having ties to both Russia and Ukraine.
Right.
What do you make of their silence? Are they just biding their time, waiting for the right moment to make a move?
Well, China's in a tricky position. They've got a lot to lose if they alienate either side.
True.
It's really anyone's guess what their next move will be, but it's something we need to keep a close eye on. They're a major player on the global economic stage,
Yeah.
and any decision they make is going to have far-reaching consequences.
So what does all this mean for someone like our listener who's trying to make smart investment decisions in the U.S.? I imagine it's a lot to take in and process.
Absolutely, and that's what we're here to help with.
I like it.
The key takeaway is this: don't panic.
Don't panic.
Market volatility is normal, especially during times like these. Making emotional decisions based on the latest headlines is rarely a good strategy.
That's good advice. It's easy to get caught up in the fear and uncertainty,
It is.
but keeping a cool head is crucial.
Exactly. And that's where diversification comes in. Having a well-diversified portfolio is one of the best ways to mitigate risk.
Okay, so diversification is key, but how do we actually go about diversifying effectively given all the potential scenarios playing out on the global stage right now?
That's a great question, and that's what we'll dive into after a quick break. When we come back, we'll explore some specific sectors and opportunities that you might want to consider as a U.S. investor navigating this complex landscape.
Awesome. Looking forward to it. Okay, so we talked about the big picture, the geopolitical chess game, the market jitters, the importance of keeping a level head.
Yeah.
But let's get down to like brass tacks. What are some tangible steps our listener can take to protect and potentially even grow their investments in this crazy environment?
Well, as we discussed, diversification is your best friend in uncertain times. Spreading your investments across different sectors and asset classes can really help cushion the blow if one area takes a hit.
That makes sense, but with so much happening globally, which sectors should we be focusing on? Where are the real opportunities hiding in this economic, fog of war?
Let's start with a sector that's likely to see a surge in demand if, and that's a big if, peace prevails in Ukraine.
Okay.
Construction and infrastructure. Rebuilding a war-torn nation is a massive undertaking. We're talking about everything from roads and bridges to housing and energy grids.
So for investors who are comfortable with a bit of risk and who believe that peace is a real possibility, that sector could offer some significant upside potential.
Yeah, exactly.
It's like investing in the phoenix rising from the ashes.
And then there's the energy sector, which is already undergoing a massive transformation.
Right.
As Europe seeks to wean itself off Russian gas, the U.S. is poised to become a major player in the global energy market.
So we're not just talking oil and gas here, but also renewables, right? Solar, wind, hydrogen, all the alternative energy sources that are becoming increasingly important.
Absolutely. This shift away from Russian energy creates opportunities across the board,
Okay.
both for traditional fossil fuel companies and for companies at the forefront of the renewable energy revolution.
It's almost like this conflict is accelerating the energy transition that was already underway.
Right.
And speaking of transitions, let's not forget about cybersecurity.
Yeah.
With all the cyber attacks and digital warfare we've seen surrounding this conflict, it seems like that sector is only going to become more, critical.
Couldn't agree more.
Yeah.
Cybersecurity is no longer just a tech issue.
Right.
It's a national security issue, an economic issue, a personal security issue.
It's
As cyber threats become more sophisticated, the demand for robust cybersecurity solutions is going to skyrocket.
So we've got construction and infrastructure, energy, both traditional and renewable, and cybersecurity. Those are some pretty compelling sectors to consider. But how does our listener actually go about finding specific investment opportunities within these areas?
One approach is to look into exchange-traded funds, or ETFs for short.
ETFs.
These are essentially baskets of stocks that track a specific index or sector.
Okay.
For example, you could invest in an ETF that focuses specifically on infrastructure projects or renewable energy companies.
Right, ETFs. Those can be a great way to get diversified exposure to a particular sector without having to pick and choose individual stocks, which can be kind of daunting,
Exactly.
especially for someone who's not a seasoned investor.
And for those who are comfortable doing a bit more research and prefer to kind of handpick their investments,
Yeah.
individual stocks are always an option.
And I think this is crucial for our listener. How do we avoid making, impulsive decisions based on headlines or market hype? How do we separate the signal from the noise?
That's where due diligence comes in. Whether you're considering an ETF or an individual stock, it's crucial to do your homework. What are the company's financials like? What's their track record? Do they have a solid management team? What are the potential risks and rewards?
So much good advice here. But before we get too deep into the weeds of specific investment strategies,
Yeah.
I'm curious, if you were advising policymakers right now, what would you suggest as the most impactful way to support both global economic stability and the Ukrainian people?
That's a complex question,
It is.
and there's no easy answer.
Right.
But I think a multi-pronged approach is essential.
Okay.
We need to provide immediate humanitarian aid to those affected by the conflict,
Right.
while simultaneously working towards a diplomatic solution that brings about a lasting peace. And of course, we need to support Ukraine's long-term economic recovery
Right.
and help them rebuild their, shattered infrastructure and industries.
It sounds like a delicate balancing act, addressing the immediate crisis while also laying the groundwork for a more stable and prosperous future.
Exactly. It's a tall order, but I believe it's achievable.
Yeah.
With international cooperation, strategic planning,
Yeah.
and a commitment to both humanitarian principles and economic pragmatism.
Well said. And on that note, we're going to move right along into part 3. In the final part of our deep dive, we'll delve into some more specific investment strategies and resources to help our listener navigate this complex landscape. Okay, we're back and ready to wrap up our deep dive into the economic ripples of the Ukraine conflict and, figure out what it all means for you as a U.S. investor.
And in this last segment, we're going to equip you with some practical tools and resources
Perfect.
to help you navigate these uncharted waters.
Because at the end of the day, it's all about taking action, right? So where do we even begin? What are some of the first steps our listener can take to really get a grip on their investments?
Well, I'd say a great place to start is by revisiting your investment portfolio.
Okay.
Take a good look at it and ask yourself, does it still align with my risk tolerance, and my long-term financial goals?
Right, because those goals might have shifted a bit given everything that's been happening.
Gibly.
What are some key questions our listeners should be asking themselves as they go through that whole portfolio review process?
Yeah, so ask yourself, does my current asset allocation still make sense?
Okay.
Given the current market conditions and my personal financial circumstances, right?
Hmm.
Am I comfortable with the level of risk I'm taking? And don't forget to consider, do my investments still reflect my long-term financial objectives?
Those are really important questions to consider. It's so easy to get caught up in the day-to-day market swings and lose sight of the big picture.
Absolutely. It's crucial to have a clear investment strategy in place and to stick to it even when the market gets bumpy.
And speaking of strategy, we've talked about diversifying across different sectors.
Right.
But how do we actually go about finding specific investment opportunities within those sectors? I mean, it can feel like a jungle out there.
It can be a bit overwhelming, but there are resources out there to help you. One approach is to consider exchange-traded funds, or ETFs.
ETFs, right?
They can offer exposure to sectors we've discussed, like construction and infrastructure, energy, or cybersecurity.
ETFs, yeah, they're like those baskets of stocks that track a particular index or sector, which can be a great way to get diversified exposure without having to pick individual stock,
Exactly.
which can be kind of a daunting task for someone who's not a seasoned investor.
Right.
Now, for those who are a bit more adventurous
Yeah.
and want to kind of explore individual stocks, what advice would you give them? What are some things to keep in mind when venturing into that territory?
If you're going down the individual stock route, thorough research is absolutely essential.
Okay.
Look for companies with strong fundamentals, a proven track record, and a solid management team. Don't just jump in based on a hot tip or a flashy headline.
Right.
Take your time, do your homework, and make informed decisions based on a solid understanding of the company and its prospects.
Due diligence is key. It's like the old saying, measure twice, cut once. But even with all the research in the world, sometimes it helps to have a second opinion. Would you recommend consulting with a financial advisor, in a situation like this?
Absolutely. A qualified financial advisor can provide personalized guidance tailored to your specific financial situation
Right.
and investment goals. And they can help you create a comprehensive investment strategy
Yeah.
that takes into account your risk tolerance, time horizon, and overall financial objectives.
Yeah.
Think of them as your financial co-pilot,
I love it.
helping you navigate through turbulent market conditions.
So to recap, we've talked about reviewing your portfolio, exploring ETFs, doing your research on individual stocks,
Right.
and seeking professional advice when needed.
Yeah.
Sounds like a solid plan for anyone looking to make sense of the current market landscape.
It's a roadmap for navigating these uncertain times and positioning yourself for potential growth.
Right.
Remember, knowledge is power.
It is.
And with the right information and a well-thought-out strategy,
Yeah.
you can weather this storm and emerge stronger on the other side.
Well, that about wraps up our deep dive for today. Thank you so much for joining us.
Yes, thank you.
We've covered a lot of ground today, from the geopolitical landscape to specific investment strategies, and we hope you feel empowered to take action and make informed decisions about your financial future.
Absolutely.
Until next time, stay curious, stay informed, and stay invested in your future.